Hello traders, this is Michael coming to you from GammaEdge on Monday, March 31st with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. This is based on the tick, overall cumulative tick of the market. We just add a time series in, which allows us to aggregate this day over day. Basically what I want to draw your attention to is we continue to see the tick deteriorate to the downside. Our bolded white CT here, which is our instantaneous intraday tick, continues in a downward sloping fashion. This is just indicating that market participants are selling more than they are buying. And then we also continue to look at the filtered cumulative tick up here, which is our plus 1,000, minus 1,000. That is institutional or larger orders that are within the overall market. We did see extreme selling on Friday, indicating that institutions were selling more than they were buying. Our breadth indicator up here, new highs versus new lows. We continue to see new lows outpace new highs, which is also not advantageous of market price appreciation. Our colored ribbon here is basically our longer term positioning and structure of the overall market. We continue to see the red, which is a longer term moving average below the cyan, which means that we continue in a bearish state, and the overall tick of the market is in a selling position. So we continue to watch this as the bolded CT moves down. If we want to see any recovery for the bulls, we would need to see this bolded white CT start moving back above these moving averages, indicating that buyers are trying to take back control of the market. But as of now, we do not see any of that occurring intraday. Moving on to the SPX-A, this is our monthly expiries. This is larger institutional positioning of the overall market structure. Again, it maintains to be put dominated. And then we see this net delta column is completely red, indicating that puts are dominating the overall structure above and below spot price. We do note some larger key levels, 5,500, 5,550, and then above 5,600 that we'll continue to watch. We call this the cruise ship, as these are the larger notional values and institutional positioning, and then they also have monthly expiries. So we separate the SPX-A from the SPX-P. The SPX-P is our weekly and weekly and monthly expiries, as well as the daily 0 DTE. Moving on to the SPXP, again, put dominated here. We have all expiries selected for the SPXP. We see the transition is extremely wide here. Obviously, that means uncertainty in the market. And with the spot price below transition projected this morning, well below transition, as always, we maintain the net delta, which is red and negative. Continues to be put dominated above and below spot price. This is basically just indicating that it will be very difficult for spot price to move up any substantial amount past these key important levels above with the larger negative net delta, unless we see some sort of expiry or monetization event. So we'll move on to the SPX GEX ratio. This is basically just a put-call ratio with a time component. We add gamma in. We discussed last week that we were seeing some sort of price appreciation without the appreciation of the GEX ratio. This is simply stated that the put dominated or the short put gamma, short-term put gamma, is actually overriding the call gamma. So we did not see any change in the out-of-the-money call speculation. So the GEX ratio did not rise as the short-dated put gamma continued to swamp the short-dated call gamma. And then on Friday, we saw this depreciation again, indicating that market participants were adding more short-dated put gamma to the complex, obviously causing weakening of price and the overall structure of the SPX. Moving on to the SPXP, this is obviously the short-dated expiries. We have 0 DT picked over here, 331. Again, noticing where we might have an implied open at 55.30, well below any transition that can be outlined by our algos at the moment. Noting the JPM collar strike there at 55.65 overhead. This is going to probably be a difficult area to overcome, at least at the open. Noting also that we do have positive GEX at 55.30 with spot price basically oscillating around that. And you see the lower net GEX there exposure at 55.30. So if we do open around that 55.30 level and get above 55.30, we do have the opportunity to move up here towards the 55.65 strike, obviously JPM area, and larger negative net delta. We'd anticipate some sort of stalling or price consolidation or some sort of rejection as we moved up to that level. If we do get above 55.65, kind of the next area we would be watching is around 55.80, 55.85, and then we do have transition above us, significantly above us at 56.35 if we really got to that point, but not anticipating us to move to that level. We've outlined our drunken sailor range. Again, these are lower exposure areas where you can experience high volatility, and the zero DTE becomes an important influence within this overall area, and we've noted that at 5,600. Obviously, round level, psychological level there, again, that we would anticipate some sort of price stalling or possible rejection as we moved into that level. The SPX net stat command. The key takeaway for here is where the highest sensitivity levels are, and we've denoted that in the left-hand plane and right-hand plane. So the left-hand plane would be below your spot price. The right-hand plane would be above your spot price, again denoting that 55.65 is going to be a key strike above us to watch for some sort of price reaction or influence. Also noting that we have significant in-the-money puts compared to the in-the-money calls above us. Again, just as a quick glance, this tells you that it will be difficult to move above that 55.65 level as the negative net delta is dominating the overall complex. Again, unless we see some sort of monetization event or some structure change where our anticipation is that 55.65 would be that ceiling, that would be difficult to push above. And then obviously 5,000 below us in the money calls area is significantly below where spot price is, but this would be the first area that we would look for to be supportive. Obviously 5,000 is very out of the realm of possibilities at the moment because we forced spot price. So the next area that we would look to would be the 5,500, which is just below 55.30, which would be a projected open. Also noting net charm, those in the money puts are going to exert a significant amount of force, almost 2 times the out of the money puts here. Out of the money puts can decay and be supportive, but the in the money puts are also the largest force within this overall area. So again, those will be an overhead ceiling matching that negative net delta of the in the money puts overhead. We've loaded the EM command and forced spot price 55.27, which is our projected open. Basically, again, this is just indicating where those key sensitivity gamma levels will be at above if we start to move to those areas. Obviously, we've already denoted 55.65, but we also denote 55.50, which could be a key gamma level also as we decide to push up, and then 5,500 to the downside. Again, plus GEX there at 55.30. You see that little bit of positive gamma there. That could be an area where we oscillate around, and if we do get above, it could be an area where we could push up towards that 55.30 at the open. The rubber band is extremely stretched to the downside for these in the money put holders. They are deep in the money, so the high likelihood that we could see some sort of profit taking at the open. Closing of those puts would obviously remove negative delta from the overall complex, and then possibly push us up towards that 55.50 as dealers have to react to that negative delta closing. So moving on to basically our SPX game plan for today. Denoting 55, let's look at the open, 55.20 projected open there. So denoting again 55.65, we'll label the 55.30 area that is PGEX, and then noting transition, or bottom of drunken sailor range, 5,600, and then our transitions up here at 56.35. Again, that's way below where our projected spot price is open. So basically, the thesis for today is let the dust settle at the open. I'm sure it's going to be high volatility. Our expected move roughly is 120 points at the moment, 2.17%. So a significant amount of price movement is forecasted for today. Obviously, we have the JPM caller roll that will probably occur this afternoon, and we do see usually some sort of volatility around that also as zero DT traders position around that also. So hopefully that helps everybody. We'll be in the Discord in a few minutes, and everybody make it a great day, and thanks for joining us.